Hi and welcome to this week's Symax Fintech Market Insights. As usual, just start with our disclaimer. So trading does involve the potential risk of loss of capital and is not suitable for everyone, but as I always say, hopefully it is for you. Now, when it comes to leverage, just be aware you can lose substantially more than that initial investment. And everything that we include in these YouTubes and everything that we do in general is just purely for educational purposes. You know, we're not trying to encourage you to trade or invest. That must be your decision. And of course, before you make that decision, consider the risks involved, your financial situation, definitely your level of experience, and also your risk appetite. And of course, only risk capital you're prepared, but more importantly, you can afford to lose. If you've got any doubts whatsoever, seek independent financial advice and do that before you risk your capital. I have so many people come to me because they've tried trading first and they've lost, and then they realise they need help to do it the right way, the professional way. So as usual, we're just looking back at what happened last week. So markets reacted to Fitch's downgrade in the US. And that also just brought general attention to government debt. You know, when you look at it against GDP, it's growing and growing in many countries. Jobs data during the week impacted markets also. It steadied the dollar. And of course, there's plenty speculation on if, you know, with all this higher treasury issuance and tightening of lending conditions, that, you know, that may prevent the Fed needing to do any more rate hikes, or possibly one at the most. Now, the next meeting's not, you know, for most central banks is not until September now. So that gives them the chance to see a bit more data to help them to decide whether, you know, there's going to be need for another rate hike. And, you know, a lot of that's going to depend on the inflation data, of course. And, you know, we're going to start to see some of that this week, especially in the US, because we've got CPI and PPI. Now, you know, as I mentioned earlier, and, you know, I want to look at this is sort of really, when we look at the data of last week, a lot of it was sort of the employment data coming out in the US. And that jobs data sort of is when you look at the companies, I'll cover the data in a second, but when you actually look around at that jobs data, now part of that is companies swapping full-time staff. I mean, that was down 600,000 to part-time staff, and that was up over 1 million. So, you know, things are just slightly adjusting in the US. And, you know, when we look at the data, so I mean, Chicago PMI came in at 42.8. The Dallas Fed manufacturing was slightly better than expected. It was -20. ISM come in at 52.7, so that's still growth. The ISM Purchasing Managers Index was lower than expected, though, at 46.4. Then when we look at the employment data, JOLTS was lower than expected at 9.58 million, so back below that 10 million mark. ADP was higher than expected at 324,000. That was a big beat, really. NFP itself was lower than expected. That came in at 187,000. Now, you know, the important thing here, and this is something I always focus on because these parts are inflationary, is average hourly earnings was higher than expected at 0.4% month on month and 4.4% year on year. And also weekly hours worked were just down very slightly to 34.3. And the unemployment rate dropped again to 3.5%. The EU CPI core came in at -0.1% month on month, which gave them a 5.5% year on year. GDP was 0.3% quarter on quarter and 0.6% year on year. Now, PPI came in at negative 0.4% month on month, which is negative 3.4% year on year. And you know, this is prices paid. So inflation should be coming down, but we've still got that corporate greed in there. So PPI isn't always being reflected so quickly into CPI. The PMI manufacturing in Europe came in at 42.7. The unemployment was lower than expected at 6.4%. And retail sales, they were lower than expected. They was negative 0.3% month on month and negative 1.4% year on year. So, you know, all in all, not terrible, but not great. And then when we look at Germany, so retail sales were lower than expected. They were negative 0.8% month on month, which was only negative 1.6% year on year. And PMI came in at 48.5. You know, just remember, anything below 50 is the start of contraction. You know, anything below 50 is considered contraction. But for me, above 50 is growth, yeah. But I think, you know, you've got to see it probably below 46 before you think, you know, you get really concerned about an economy. So just below 50 is sort of okay. It's not great, but it's not terrible. And factory orders are up as well. In the UK, shop price index was 7.6%, so we're still seeing higher inflation. The Bank of England hiked rates by 25 basis points to 5.25. You know, the highest they've been for over 15 years, you know, as they're still trying to get control of inflation. And, you know, any future rate increases now will be data dependent. What was surprising is 2 of the committee members voted for a 50 basis point hike. 1 actually voted to leave them unchanged. So you've seen a little bit of a contrast in the voting coming from these central banks. You know, different central bankers that are on these panels have different ideas of how to manage the economy at the moment. In China, PMI, manufacturing was higher than expected, came in at 49.3, so just below the 50. Non-manufacturing was 51.5, and the Caixin PMI manufacturing was lower than expected at 49.2, but services were strong at 54.1. Australia, RBA decided to leave rates unchanged at 4.1%. You know, it was sort of touch and go whether they would increase or not, but again, their inflation data seems to be signalling that they're winning the battle against inflation. Personally, I think it's cost price that's actually beating inflation. It's not the rate hikes. Now, for Canada, PMI manufacturing was higher than expected at 49.6. PMI came in at 45.2 and 48.6. Now, employment dropped by 6.4 thousand, and also, that was lower than expected. And also, the employment rate was at 5.5%. And in Switzerland, CPI came in year on year at 1.6%. So just a little reminder of what we provide in the way of services. So, you know, we provide these YouTubes to help you prepare for the week ahead. We also do a daily newsletter which gives you global news and on a daily basis, so you're getting that nice and fresh from overnight, and sometimes even first thing in the morning. And you know, my views are included in that as well. And then we do offer chart levels, including pivot points, as a subscription service. Now, when it comes to our academy, we offer one-day workshops. You know, there's a whole variety of them. It depends, you know, if you're just getting into trading, so we can help you to get started, to give you those foundations. give you some help to help you decide whether trading's going to be for you or not even. And for anyone who's already trading, we can help to fill in the gaps that you may have with your trading skills, whether it's fundamentally or technically, risk management, even psychological, whichever things that you need help with, we can provide that. We do a variety of 1-week courses, and one of them also includes a free trading challenge. Now, the idea of the 1-week courses is to help you to build up your knowledge, whether you're starting from scratch or you've gained a little bit just watching maybe some YouTubes on the internet. But within 1 week, we will provide you with some solid foundations. We go through theory in the morning, practical sessions in the afternoon. And during that week, if you've got an inner trader, I will help you to find it. And then, of course, we do some masterclasses. So we do our comprehensive accredited masterclass, and that's designed to provide you with all the knowledge and trading tools that you're going to need to navigate any type of market in any conditions, and also across any asset class. I've been trading for 50 years, so I've got some knowledge on everything. I wouldn't say I know everything, but I know a lot. And of course, during these courses, I try and pass on as much as possible. We also do a flexi masterclass. You can break up the weeks. You can with the comprehensive accredited one, but you can break up these weeks. You don't have to set all of the weeks for the guided learning in one go. You can come and go as you need to, because we provide this course on a regular basis. Which, again, the Flexi Masterclass does include that free trading challenge. Now, if you feel that you're already at a certain standard, maybe you just want some help to get to that next level, and we can do that with trader mentoring, which is offered by the hour, by the day, or even a monthly subscription. We consult to companies. We help them with their FX and commodity exposure. So as you can imagine, over the last 2-3 years, that's been, a major concern for many companies. And we are a provider of educational content to individuals, exchanges, and brokers. Now, as I mentioned about these funded trading accounts, it's a great opportunity if you don't want to risk your capital, or maybe you feel that you're undercapitalized, underfunded to be able to do this for yourself. Then there's your answer. Look at the Nordic Funder challenge to see if that one's for you. If not, we have 1 or 2 others that we can recommend to you as well. If you would like to contact us with any questions or to find out more details about our services, you can contact us at info@symaxfintech.com, or if you've got any questions you'd like direct to me, then it's chris.tubby@symax-int.com. I look forward to seeing you in part 2.